welcome back. You're watching The Money Show. I'm with you, Kavita Thapliyal, and now it's time to answer your portfolio queries. And for that, expert we have on the show is Shweta Jain, who will be looking at your portfolio queries and helping you align your investment strategies with all your financial goals. So, Shweta, hi, evening. Welcome to the show. First question, let's take it up. This is from Mr. Ashok Bidway. He's invested in a couple of AMCs. We don't have the schemes names, but he's doing SIP in SBI Mutual Fund and PGIM India Mutual Fund schemes. He's invested 2 lakhs in Canara Bank AMC as well. Now, what he wants to do is start another 2,000 SIP for two, and for that he wants 2 to 3 mutual funds recommendation. Also, he wants to do a 2 lakh lump sum investment. So, the information that we don't have of the AMC of the schemes, I think we should just let it be and ask him for more details on that later on. But then what we can do is just help him invest this 20,000 per month in 2 to 3 schemes if you think that's needed, and also 2 lakhs lump sum.
Hi Kavita, thanks for having me on the show. So the SIPs could be in UTI or DSP Nifty 50, PPFAS FlexiCap, and medium mid cap. Since he's mentioned that he has been investing, I'm assuming he's not absolutely new, but keeping in mind that he still may be a new investor, I think this is a good combination because even the mid cap scheme that I've suggested is quite a diversified mix. It's not necessarily a very concentrated portfolio. I think it'll be a good mix for him to start with. The lump sum could be also in similar schemes. I'm just not adding the mid cap for lump sum. UTI Nifty 50, PPFAS FlexiCap 50K each, and ICICI large and mid cap 1 lakh. I'm adding this as a good mix to the portfolio. I think the portfolio becomes quite diversified with this mix of schemes.
Very important. And also, Mr. Ashok, if you're watching the show, we would really request you to send the details of the investment that you're doing in SBI and PGIM India Mutual Fund. Now, I just want to ask you a few questions on doing a lump sum investment at this point in time. How should he be staggering this? We know the market is facing global headwinds. There are a lot of development on global market front. We just had the earnings season is almost more than half done now. And for our markets also, although we are seeing good set of numbers, but then we are heavily impacted by global headwinds, and we are looking at the market not able to sustain the topper ends. How can one stagger this 2 lakhs?
He could stagger it over the next 2 months. I wouldn't say more than that because once markets move, and if they move upwards, he's going to sit and regret. And if it moves downwards, he's not going to invest the rest as well because he feels like more it'll fall more. Since he's doing SIPs as well, I'm not really worried. And if equity investors are investing for a period of 10 years plus, I still don't think there's much to worry about. Since SIP is getting added on a regular basis, so he will keep averaging out the costs as well. So I think it's okay if the time horizon is 10 years plus. If it's 3 years plus, we anyway don't really recommend equity. So I think that sort of states it down.
Why don't we recommend equity for more than 5 years? Mutual funds and stocks almost we need to be invested for almost a year. That's what the long-term definition for direct equity is. But then, yeah, why less than 5 years, no equity, mutual funds? Shweta.
See, over time, you see equity returns. People just assume it's 12% plus, right? Everywhere, even when we give calculations, we give you 12% plus on an annual basis. But the reality is equity doesn't give linear returns. Like say, for example, FDs. Like FD will give you an interest every year on year, right? So it's quite predictable. In equity, you don't see that. You could see 2 to 3 years of continuous flatness, fall, before you see 1 year that will make up for all of those. So for you to stay invested for that 1 year, sometimes it could happen in the first year of your investment. Sometimes it could happen in the 5th year or 6th year of your investment. So absolutely not recommended for less than 5 years to cut down on the risks.
Let's move on and let's take Amit Kumar's question. He's from Bhiwani, Haryana, and he's 30 years old and government employee. He can save 20,000 per month, and he's doing SIP in HDFC Mid Cap, Nippon India Small Cap, Motilal Oswal Nifty India Defence Index Fund, and Parag Parikh Flexi Cap since last 3 months. He wants to stay put for almost 15 years in this investment. 1 CR is his goal, and wants your advice on the fund mix. He's been doing HDFC Mid Cap since last 2 years. Small Cap of Nippon India. He's not given the duration, so I'm assuming it's 2 years. So I'm sure he's been seeing volatility out there. And the defense fund account of Motilal Oswal. 1 year is a time frame since he's been investing, and 3 months Parag Parikh Flexi Cap. Shweta, recommendation?
So I think Amitji has been watching the show for a while as well.
Looks like.
He has put in the amounts that he actually needs for the goal. So he needs to invest 20,000 per month, which is what he said he can put, but he isn't putting yet because he's doing an SIP of, I think, 4,500 rupees. So he needs to increase it to 20,000. He already knows that, I think. And the schemes also look good since he's investing for a while and there is small cap in the portfolio. I think it's okay. The one thing that I would definitely add for him is increase Parag Parikh Flexi Cap because he's investing more in the small cap and less in the flexi cap. I think it should be ideally the other way around. But since he's already investing 2,000 in the small cap fund, I think Parag Parikh is the easiest one that he can add on more to. I think the other thing that is missing in his portfolio is a good large cap fund. So I think a passive fund would add on low cost, no frills. UTI Nifty 50 or a DSP Nifty 50 could be a good addition to his portfolio. And yes, he knows the goal and he knows the amount he has to invest. So he should try and get there as soon as he can.
Right. So that's the advice coming in from Amit. And with that, it's a wrap. Thank you so much, Shweta, for being on the show and helping our viewers with their portfolio queries today. Thank you so much.